Ladies and gentlemen, Greg Beklosky with the Kickstart video for January 10th, 2024, where I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So let's get started. Looking at the euro versus US dollar, let's put the first 3 days of perspective. We have a high price near the 1.09768 level. We have a low price near the 1.09909 level. So that is only about, 70 pips or 68 pips from the high to the low in trading here this week. That isn't a lot, and as a result, we're seeing the 100-hour moving average move sideways here. That currently comes at 1.0942. Recall from yesterday, I was talking about staying below the 100-hour moving average here as being somewhat bearish. Today, we're talking about trying to hold support against the 100-hour moving average here. Keeping the buyers more in control. That's unfortunately what happens when the price goes up and down and up and down and up and down. You really can't help yourself but get whipped around, and that's unfortunate. But you still, as a trader, try to lean against levels and hope for eventually a break to the upside or to the downside in trading. And if you can lean against things like the 100-hour moving average and it goes higher, then you're looking good and you're feeling good. If the price breaks below the 100-hour moving average and you lean to the downside and it goes lower, you're looking good and feeling good as well. So it's all a matter of just trading the markets, and that's what traders are doing in the first 3 days of the year. As I mentioned, the 100-hour moving average is trying to hold support. We're trading right on it right now at 1.0942 and probably go below it in the next few minutes, I'm sure. But if the price can hold support, the 200-hour moving average and 38.2% retracement are the next key targets. The price fell below the 200-hour moving average back on January 2nd right here, and moved to the downside to our lows through here. The 38.2% retracement was tested on Monday's trade. We did move above it on Friday through the employment volatility, but the market on Monday rejected that level and rotated back to the downside. So that's shaping up as a key technical level or key technical area to get to and through if the buyers are to take more control. On the downside, if we do break below this 42 level, I talked about the 29 level yesterday, and that level goes back in time. You can sort of blur your eyes and see where it was resistance through here, it was support through here before moving to the upside, and then we returned back toward that level through here, and you can blur your eyes again and see where there's either resistance or support during that level. Yes, there was a move below that line right here, and that was quickly rejected. In yesterday's trade, it's gotten a little bit more sloppy in yesterday and today with the price moving below that level. So be aware, but if we do get below that level, I think we head on down toward the 09 level, our low for the week. If we start to extend the trading week or the range for the week, then we head toward this swing area where we have swing lows going back in time to here and here and here and here, and again return to it here. So that would be the next key targets near the 1.0877 level and 1.0894. So those are the levels to get to and through if this price is going to break out. But right now we're just waffling back and forth above and below the 100-hour moving average. Let's take a look at the dollar versus yen next. And this pair is getting its second move to the upside in trading here today. We did have wage data come out of Japan, which was weaker than expectations. That weakened the yen and increased the dollar yen in the process. And what technically speaking, what we did do as well was hold support against the 100-hour moving average here and here. So we kept a positive bullish bias off of that technical level. We also moved back above the 38.2% retracement, and what I like about this is the price on the declines after breaking above it did find support against that level, not once but twice, and the price has moved higher, making new highs in the early New York session. There's not a lot of resistance until we get up toward the 146-ish type area, the 50% retracement of the move down going back to this November high to the low that we saw in December. That's a nice big trend move to the downside. The 50% retracement comes in at 146.07, and the high price that we saw on Friday's trade moved up to 145.96, got within 11 pips of that target. On the top side, there is a swing area between 145.96 to 21.70 or 21.22 as the target area up there. So staying above the 100-hour moving average, staying above the 38.2% retracing gives the buyers more control. We'll see if they can keep control. Also, you might want to watch the 94 level right through here after the most recent break to the upside here. That level corresponded to this high price going back to December 19th. Finally, let's take a look at the sterling versus US dollar. And this is, if you thought the euro was bad, the sterling versus US dollar is worse. If I were to put a big box around the price action of late, I guess this goes back to, I don't know, mid-December. This is where most of the price action has taken place. We did move above that area right through here, making our exhaustion high up here at 128.26. But then reestablish resistance against the highs of these levels and rotate it back to the downside. We haven't been near that level since, after returning back to our lows through here and finding support on a number of occasions. So clearly we have a nice little floor here. In between all this gobbledygook and ups and downs is the 100 and 200-hour moving averages. Those are these blue and green lines here. Also near that level is a 38.2% retracement of this move to the upside. That level comes in at 127.015. So around the 127 is now support for the sterling versus US dollar. Stay above those levels is more bullish. On the top side, this swing area is kind of muddy as well. I'm not necessarily in love with it, but get above the 127.35 level. We couldn't do it yesterday here, so getting above it right now would be more bullish. We have tried on a couple different bars in trading here today, but each of the bars failed, so maybe there's something about that 127.35 level. We'll see. But a mess, and that's what we're seeing in the euro and the sterling versus US dollar. The dollar yen is a little bit more cooperative, if you will. But all of it is still trying to figure out what it wants to do in 2024 for these currency pairs, and we'll see how it all pans out. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.